Okay, news is coming out here. We're looking for, guys, drop me the year over year number if you could, Lee, if you don't mind. Someone drop me the year over year number. I know it doesn't show in Forex Factory. It's like the one data point that Forex Factory really drops the ball on, core PCE year over year. If somebody's got that for us, let us know. Reaction initially is stock market is just a little bit higher. CAD retail sales, CAD core retail sales came in light. Core PCE was lower on a month over month index, 2.8% year over year. Fed was projecting 2.9%. So, hey, that's some pretty good news. Maybe Santa Claus is not lost after all. I don't know. Let's take a look. Stock market, NASDAQ was down at 1.8% this morning. So we're down 1.2. S&P 500 was down like 1.4, I think, this morning or something like that when I woke up. When I woke up at 2:30 a.m. and scrambled to the charts. Just kidding. I actually slept through the night. It's beautiful thing about having cash in the reserves. It doesn't keep you up at night. You know what cash is. You know it's not going to gain or lose a bunch of value overnight. I am still, like I said, I've got some cash on the sidelines, cash reserves built up for a larger pullback if we get it on the stock market. But I also am long the NASDAQ. So I'm really somewhere in between. I want to buy Bitcoin so bad, but I just can't. Benny, why can't you buy Bitcoin? Dollar index is slightly lower off this number, guys. Makes sense. PCE coming in a little bit light. I am going to put a trade on here really quick, guys. I have been watching dollar Swiss franc for a pullback. This pullback is going to give me, I think, that entry. So I just went long on that one. I'm gonna drop that in the drop that in the Discord really quick. Give me 1 second to do so. This was just a currency trade I've been watching, waiting for a pullback on. Dollar Swiss is a long position I just took. Positive swap on that one is real nice too. Wouldn't mind holding that over the weekend. Dollar cost averaging approach, so no stop loss on it, but just a tiny position. So we'll see. Dollar index is lower here this morning, so could potentially even get, if we really follow through to the downside on dollar Swiss, I could actually get a bigger position built, which would be great. But I will take that initial position here. Just gonna drop that 1 second for members. Okay, so Bitcoin's bouncing. I mean, take a look at this. We saw 92.5 on Bitcoin this morning. What do you guys think? I mean, Bitcoin is seeing some bounce back here. But just let me reiterate what I was saying before all the stuff. Bitcoin's correlation to the NAS is super high. Now, why do I say that so adamantly? I say that because I know a lot of people, a lot of new people to the markets. One of the most common mistakes is they think they're spread out a little bit in the markets. They think, oh, I've got some Bitcoin, I've got some NASDAQ, I've got some Tesla, I'm diversified. The problem is correlation in markets is something every single one of you guys needs to know about. Because if you're somebody who has a portfolio, I know some people just trade, Forex pairs, or they trade gold and they don't really have like a portfolio. They don't hold anything longer term. But if you're someone who does have a portfolio, meaning you hold some stocks, you hold some Bitcoin, you trade some calls and puts and things like that, or you're long and short Forex pairs, things like that. If you have a basket approach, you need to know your correlation amongst your assets that you hold. If you're just fully correlated across the board and the markets tank, everything you have goes down at once. So you have to be careful. Okay, so S&P 500, really nice little bounce back here. Let's watch this close, guys. I remain, again, cautiously bullish. If we get a close like this, that looks okay to me. If we get a close, I mean, today is so pivotal. If you get a close like this today, we're on bigger sell-off watch. Because if you get a close like that, I would not be surprised if we go down and test 5,700. But today's bounce off of PCE numbers makes a lot of sense. Hey, inflation may not be, the Fed mentioned some worrisome inflation concerns. Fed projected, guys, the Fed themselves projected 2.9%. Actually, specifically, 2.89 was what the Fed projected. So the market was expecting, 2.9. What did we get year over year? We got 2.8. So less inflation is a good thing for the stock market. Stock market can say, okay, that's cool. We had solid GDP. Inflation was cooling a little bit today. Could be worse. Let's just say that if PCE came in at 3, guys, well, I think we're down here, right? But we're not. We had PCE numbers come in not too threatening. Market's bouncing a little bit. We'll take that. Dow Jones bouncing a little bit as well. Russell's up just slightly, 0.7. The Nikkei, Chinese stocks just doing absolutely nothing as per usual. VIX completely reversed on that, right? So you had VIX rising, and then dropped hard off of that. A little bit of uncertainty came out of the market right on that PCE number. Here's gold. Gold likes that a lot, right? Why would gold like that? Well, cooler inflation may cool off the dollar just a little bit. And if that happens, then gold is like, cool. Weaker dollar, good for gold, 9 times out of 10. Keyboard noises and something. Okay, good. Lee, I was just really more with my keyboard. If it's clacky to the point where you can't even hear me talking, that's where I was more concerned. But if it's not too bad, then okay. Look at that, Bitcoin back to 95. Nice bounce there. Dogecoin was down, I think. Look at that, Dogecoin was down 15%, 16% on the day. What an insane asset. Take a look at the dollar index, seeing a little bit of a sell-off here. Here's your 30-minute chart. Dollar index pulling back here off of those, sky high moves. 108.5 getting tagged, pulling back here. Question is, do we find immediate bull support for the dollar or not? Let's take a quick look at yields. Are yields also coming down? I have a long TLT position. Yeah, we got a little bit of a bounce back here in TLT, pre-market trading at 88.5. So yields coming down this morning. That's a little bit of a relief to the market. Guys, I think one of the reasons stock market, actually one of the core reasons stock market is down, Bitcoin's down, gold is down, is this chart right here. The yields market rising, bond prices falling, right? So you've got yields shooting to the upside and starting to spook the market a little bit. Got this sell yesterday around 98. Let's just call it, so 98, right around here. Went short the Aussie yen. Tagging kind of resistance in this area. Nice reaction to this area. Looking for a push lower on Aussie yen. This is a bit of a hedge in the portfolio. I mentioned, like I said, I'm cash heavy. I've got some long positions. This is sort of a hedge. I like that Japanese yen idea we discussed a few days ago. If you've been watching the streams, watching the videos, you know where I'm going with that. I've been talking about the COT data history that we pulled up here, and saw that in the Japanese yen specifically, we've had some interesting activity, right? We can pull up, by the way, guys, latest COT drops tonight. So we get the COT report, the latest data. I am really interested to see, did big money start buying the yen more this week? We'll get that information tonight. So Japanese yen futures have been getting accumulated aggressively by institutional money. You had, again, long contracts being added, right? And short contracts being pulled off. So think about this. Institutional money aggregated on the commitment of traders data for the Japanese yen specifically. And by the way, this impacts everybody. If you trade indices, gold, the yen is really key to a lot of stuff. It tells you a lot about market sentiment. So big money seems to be building a long position in the Japanese yen. That's why I bought, I shorted the Australian dollar, bought the yen as a bit of a reaction to this. I'm dollar cost averaging. I'm not like all in at these levels, but I'm looking for some downside in Aussie yen. If that happens, then great. If it doesn't, then I'll just look to scale out. But check this out. So we've been having increased long positions in the Japanese yen futures contract, according to the commitment of traders data. This is big money making moves into the direction of long yen. So keep that on your watch list, guys. I mean, that's something that I've been keeping close to my chest here recently, because again, if you're seeing big accumulation, actually, I keep saying 3 weeks in a row? We've had 4 weeks in a row of significant increase in long contracts and closing of shorts. So big money seems to be building a long position on the Japanese yen, and I think it's worth keeping an eye on. So we'll see. You know, for me, it's a bit of a hedge in the portfolio, but we'll see.
But I'm actually long, especially on Nasdaq US 30s. But 2 rate cuts, I think they are not really enough. It shows us that inflation might still go higher. Plus, the tariffs might put the dollar in a corner where it's going to be quite stronger. And I think inflation will be staying here quite longer. And also, it means the rates will be higher for longer. And that is not really good. So I think it will just depend on the market structure. I will just have to follow the news and just check the market structure. But it seems like inflation is still going to be higher for quite long, unless if these companies get used to this rate as they perform very well. We might find that they don't really feel any pain with that. But I think small companies like Russell 2000 and stuff, they might suffer a little bit. But yeah, I will just have to wait and see.
I'll tell you what, Kenzo, I like the NAS for what you just explained. The NASDAQ, as you know, audience members may or may not know, is a more concentrated index. It has a lot of concentration in the companies that we all know very well, like Apple, Amazon, NVIDIA, Qualcomm, or actually not, Qualcomm, Broadcom.
Yes.
There's many companies in there, right? So a lot of these giant software companies, these giant conglomerate, you know, online internet companies, I actually like the idea of being long those ones, even though it is higher risk in some regards. Tech stocks can plummet very, very hard. That's why I do have personally some cash on the sidelines prepared for a deeper drop if it happens. But the NASDAQ has some companies in it that are a little bit less rate sensitive, right? As you mentioned, the Russell, go into that just for a second. What are your thoughts on the Russell? Would you be like Russell versus NASDAQ? Why do you like the NASDAQ more than the other ones?
I think Russell, it's good. Russell companies, as they are still very small, they are good if inflation or let's say rates are going lower so that they can easily borrow. But if maybe the economy is not very well, let's say the rates are higher, they're not going to perform very well because they're not going to have enough loans to develop whatever they want to develop. But when we talk about NASDAQ or companies which are in NASDAQ, their market cap is quite huge. So which means they can actually survive for quite long. They actually have some extra cash. They're quite big. For them to fail, it's unlikely. So which means they don't really feel the pain that much. And at the moment, I like the fact that I think 2025, we are going to focus on maybe products that are going to go along with AI. I think that will also make the market very entertaining. And I think that will push the market to go higher. We just saw the examples this year. The market was just going up with the likes of NVIDIA and the other ones. I think they will still introduce something that will go along with those AIs, because at the moment, there's nothing way bigger on the AI side besides ChatGPT. I think we're still going to have some serious products here and there, in which they're going to actually have to add revenue, and that will keep maybe Nasdaq to go to the upside.
You know what, you said something really interesting there. I want to just kind of elaborate on it a little bit and add something to it. So you mentioned these companies, right? The giant ones have a lot of cash at hand. That is a major advantage when cash becomes more valuable. And what I mean by that is that if borrowing costs, right, when interest rates go up, borrowing becomes more expensive. So as you mentioned, like the Russell is full of companies that are still growing, that may not yet have huge cash reserves. They need to borrow money in order to fuel that growth. But if interest rates are higher, their borrowing cost goes up and it cuts into the business's profitability. The thing about companies that have a lot of free cash flow is what we're talking about, that have a lot of cash on their balance sheets. They don't need to play that game. They don't need to, if interest rates go up, it doesn't really hurt them because they have cash at the ready. And that is why there are certain companies that are poised better than others. You know, in 2023 and 2024, the Nasdaq has had severe outperformance compared to the others, largely because of what you're pointing out. Interest rates were very high. People were concerned about inflation, continuing to make borrowing costs more and more expensive as the Fed tried to grapple with inflation. Meanwhile, companies that had a lot of cash on hand, for example, Apple, they're not as sensitive. I mean, take a look at Apple, even in this sell-off. Is Apple going down with the rest of them? Yes, but look at how well Apple is performing compared to, let's say, let's say a Tesla, right? Let's just take a look at Tesla, which is also a company that does quite well and has cash, but you can see how quick it dropped 11%. I like to pull up some of these stocks too, Kenzo. Here is Coinbase, SoFi. These are growing companies, small companies that are very growth heavy, and you can see how quickly they had some pretty sharp sell-offs in response to inflation concerns rising. Anyways, thanks for breaking that down. What else are you watching? What do you think about gold here? Is gold getting more attractive or still not really something you're looking at?
Yeah, if maybe I can check the previous event that we had, like let's say PCE. Yes, I will actually obviously look for a buy. But if maybe, unfortunately, I won't share my screen. I think my network is very slow. So
no problem.
If we look at PCE, yes, I will look for a buy. But besides that, I don't think it's quite attractive at the moment. I think it's because of the tensions here and there. I rather focus on maybe Nasdaq, US 30s. But if I go in on gold, I'm not gonna go aggressive. But to me, for now, it looks like it's gonna be bullish. But I think we're going towards year end, one way or another, it's going to reverse, especially when we already know that we're going to have very fewer rate cuts. So which means the dollar will be quite stronger for longer. So it's no longer attractive. Gold is not really longer, it's no longer attractive like before. So the only thing that makes gold to be stronger is those investors who are in those countries where there is geopolitics and stuff, they still buy in gold here and there, but they're not going to survive longer. So it means if maybe the dollar is going to perform very well, it's way much better for an investor to put their money where it's safer, which means is to buy gold, US bonds and stuff like that. So I think slowly, even if it recovers, it's not going to be for long. It's not going to be quite long. So we are going to see some sell-offs along the way.
Yeah, no, it's really interesting. I mean, gold, what was such a strong story for 2024 has really slowed down. And I think you just pointed out something really key about the sell-off in gold is, gold is still very sensitive to what the Fed has to say about interest rates. And we can clearly see that the reaction from gold was not great from what Powell had to say. Essentially, inflation is showing signs of not going anywhere. Somebody in the audience actually asked Jerome Powell during the press conference if they're now just trying to target for 2.5%. And, that was an interesting question. They said Powell basically responded to that with, no, adamantly, we are still shooting for 2%. And we're going to do what we need to do to get down there. And I think the market said, okay, so we are really not going to see rate cuts next year because we can't seem to stay below 2.5%. We came down to that area and have now been bottoming out. And I'm talking specifically about CPI. We've got that pulled up here. Why not show it? So CPI, came down. It was easy to get down that first, kind of several percentage points from there. But then what has been stubborn for inflation, where we've seen bounces, is right around this 2.5% level. And the Fed clearly is not happy with that because 2.5% May not sound extreme, but 2.5% can very quickly turn into 4. It can turn into 5, and that quickly starts to challenge, a recession. Unemployment could rise. So the point is, Fed seems adamant about getting it down to 2%, and that last leg might be a little bit painful, right? It might mean stronger dollar, as you mentioned, might mean keeping rates higher for longer. And that does not sound very attractive for gold. So, gold loved this environment where we were rapidly dropping in inflation overall. Gold was like, great. But then now gold is seeing the Fed say, hey, we're not where we need to be. This needs to come down. For that to come down, we have to keep interest rates high. Gold doesn't like that.
I just closed out of a mean reversion trade here on euro pound. Closed out just under 1% here, so around $300. Puts me at just under 10% for this month, so 11.6 last month, 9.6 this month. And I've still got some short-term trades here running. So I've got a position here on euro dollar. You guys should know by now, I sell euro dollar like a crazy man. Any pullbacks, I'm there to sell. So obviously during PCE or just before PCE, I put a short position on. If it hits take profit due to news, great. If it goes up, great. Just another chance to sell. And that's exactly what I did. Euro pound is here. So I'll just turn on trade history. So you can see sold here, got out for about 1%. And I'm still in my euro yen positions here. I also did the same thing here on pound dollar after PCE, took a short position on that one as well. But again, these are very short-term trades and I just can't say no to money. So stuck in a rock and a hard place, really, aren't I? What can I do? Bashi, Merry Christmas, buddy. It's good to see you. Amin, yeah, I'm good. How are you? Ball out, James. Nice 100 pip move from UJ high and gold long still running. How is gold doing? Actually, I've not really checked any of the markets today other than what I'm already in. Oh yeah, gold. I've got to say, ball out, you're on a bit of a roll here. You called the gold shorts, gold longs. Good stuff. I hope it pays out for you. Has anyone noticed that euro fell off since Macron's statement about arms embargo on 7/10 this year? Yeah, the euro fell off basically in August. I actually timed it almost perfectly. And again, I know I'm on here quite a lot and I'm always talking about the euro. So I won't go into it too much, but I put a YouTube video out. It was roughly September, around this period, saying that I'm going to start shorting euro dollar, which I did. So I managed to basically just dollar cost average this whole move to the downside, which is where basically all of my profits came from. New Zealand dollar, I think very bearish on New Zealand dollar. It's taken a hit along with China and the Australian dollar here. So you can see I've took one short position that worked out here, planned another one that just didn't, it literally, this market gapped right at my entry point. So I just didn't get in, which was really frustrating. I was looking for a gap fill or some sort of pullback and we just didn't get it. So I started planning again for another short, didn't get it. I think we're now actually at quite a strong support level. Yeah, we are. So we're now at, yeah, it's probably not the ideal place to sell actually right now. Don't want to sell into a really strong daily support. This is now a pretty solid double bottom in my book. So I would really be looking. Actually, I'm going to say looking for a pullback, but I've been looking for pullbacks and I didn't get one. So again, I could be sat here in a couple of weeks saying, "Oh, I should have just sold it." But yeah, I think just generally following the market dynamics, then a bounce off here would make sense. Happy holidays, James. Liban, happy holidays to you too, buddy. Paolo, hello. It's been annoying, but only buys. Yeah, I would not have liked to have been in the what do you call it, in the gold trade recently. Hey James, any idea why Swiss yen is flying despite Swiss rate cuts and JPY bullish consensus? Yeah, so where's the yen? Swiss yen here. So yeah, I mean, in theory, you would expect this market to be bearish, and I think we will go ahead and see that. Actually, the price action here on the H4 is actually very supportive of possibly some further moves to the downside. Now, this is, I'd say it's a minor level of interest here, nothing too crazy, but it's still something worth paying attention to. We very clearly see an indecision between bulls and bears after a very strong move to the upside. RSI has just come out of overbought. So from a technical aspect, I actually wouldn't mind going short here, stop loss above the previous highs, and possibly just take profit at the recent low. As for the reason for the bull move, I'm going to be honest. I think it's more positioning rather than it being a macro-driven thing. And what I mean by that is it was basically 50-50 on whether the Bank of Japan was going to hike or if they were going to hold. And obviously they decided to hold. Now, some people might view that as a bad sign or not the right decision, causing them to sell the yen. Other people might be getting out of the yen to get back in at higher prices in order to sell, or sorry, to buy in the January hike that is pretty, it's expected at the moment that we will see a hike in January, but it's very early on. We've only just had the rate decision for December, so we'll see how that develops. But yeah, again, I viewed it as quite an obvious sign that they weren't going to hike because the Bank of Japan already said that they don't see a problem with waiting. So I think it's as far as I'm concerned, it was expected. Hi James, if you do DCA, you do not use SL at all. You just continue to add. Surge, yes, essentially. It's not quite as simple as that. If you're DCA trading, you have to have relatively small lot sizes, obviously depending on what time frame you trade and how much capital you have and how much you're willing to risk, etc., etc. And you also need to be very, very willing to cut positions, and you need to understand when to cut positions and when to add into positions. So risk management goes a lot further than just a stop loss. That's kind of just, you know, trading 101. If you're really looking into risk metrics and management models and things, it can get very, very complex. I put a tweet out, I think it was yesterday, actually, saying that I break basically every rule that retail traders are sort of told to follow. So stop losses, don't use indicators, use naked charts, don't bother with fundamentals, all that sort of stuff. I trade fundamentals, I use indicators, I don't use stop losses. Well, I don't normally use stop losses if I'm DCA trading especially. So you just got to find what works for you. Marcus, happy holidays to you, my friend. Do I go live every day? No, I am just a guest here. Nick is live every day, almost, unless he's away or something's happening. But yeah, Nick is normally live every day with some other guests. I'm here 2 or 3 times a week-ish, give or take. It's probably the last time you'll see me this year, though, because I don't even know if the channel is going to have lives next week, because Christmas is on Wednesday. Unless the A1 team are just like elves that work and work and work. Hi, James. Just had a mince pie and remembered why I don't like them. Oh, don't blame you. Mince pies are disgusting. You know what? Actually, if I had the choice to starve to death or eat a mince pie, I'd rather just starve to death. They're the most vile, disgusting creation ever. Long on gold for today, though. I do actually finish today. Happy holidays. Happy holidays. But don't see you then. Lee, good stuff. I think gold definitely has potential to have a little bit of a correction, actually. It's seen quite strong selling pressure, actually, since, for the past 8 days. And it's more, in my opinion, this is more driven by dollar strength and obviously what the Fed has said and things, of course. But yeah, typically just looking at this chart, it wouldn't be a surprise to me if we do see some sort of pullback. Where to is the question. That's always the question. Where is price going next? My first port of call would be this 50% 618 level. So somewhere here would be sort of where I would either have take profit 1 or an alert or something, and see how it goes from there onwards. What do you think about the AUD? I think the AUD is really struggling. The Australian dollar is heavily affected by whatever is happening in China, and China is taking a hit. It's definitely not doing too well. So the Australian dollar is also, of course, taking a hit, similar to the New Zealand dollar as well, actually. So if we look at the Australian dollar against the US dollar, it's essentially just melting it. Actually, I'd put it now in the same range as the euro in terms of I just don't see any hope really with the China is really weighing it down. So in my opinion, Australian dollar is just going to continue to plummet until China sorts its stuff out. Do you mind showing how you do it to get an idea? Yeah, roughly. So we'll take euro dollar because this is what I've been most active in. I'll put trade history on here as well. So essentially, these orange lines are just Bollinger Bands. We've got an RSI down here as well. So this is where the indicators come in. Obviously, we're just looking for extremes in the market. So when the market is overbought, I'm selling it. So we've got an RSI overbought. We're at the top of the Bollinger Band. I'll sell. Great example is here. After news, we broke above the Bollinger. Even if we don't have a huge move to the downside, from these types of news moves, we'll typically have a correction. So I'm selling that. But also, we've got the fundamental side of I'm just very, very bearish on the euro. I'm very bullish on the US dollar. So even if this position doesn't work out straight away, like you can see it didn't down here, I had quite a prolonged drawdown. It's no issue because I know the macros on the longer term is still in my favor. So that's basically it. It's essentially just a mean reversion, but obviously with some fundamentals mixed in there as well.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.